we're gonna be seeing a lot of this place. Trading office, it will be under construction in a couple months. Until then, we're gonna just hang out here and get the lay of the land. Hey, anyways, this morning there's been a lot of volatility, right? It's been just all over the place. The opening gaps were crazy. Trying to wrangle in which ones were going to go, which ones weren't going to go. Had a lot of things that just looked like they were going to pop and then didn't move. Had one that went for $3, right? So we had some really good trades, and we had some trades that just sort of hung around entry prices and did nothing for us. But the trade of the day has been volatility. So where are we capturing that? It's been in the QQQ, and it has been in Tesla for us. So in the room today, all day, I've been talking about taking the Tesla trade, and also talking to my friend Naranjan about his QQQ empire that he's working on, which is fantastic. But let's go take a look at the charts, and I think it's real important that today we talk about just waiting for the opportunity to come to you on days like this. A lot of geopolitical stuff going on, right? And the tariff talk is just making everybody crazy. So markets don't like uncertainty; they hate it. And every time it looks like there's a little bit of indecision in Washington, the market starts selling off, and then it gets real hard to figure out where to get in, where to get out. So let's go over some of that and see if we can't get you in front of some opportunities for the rest of the session. Here it is. This is the chart of the day, right? So this is Q and this is Tesla, and this is the way that we've been trading these. So if you look at the QQQs first here, you can see we had this big sell-off after what looked like it was going to be a big positive open. We thought things were going to head in the right direction today, with the markets in general. And then overnight, the futures sold off, and we didn't get that pop, we didn't get that spike we were looking for. It looked like we were going to open on the other side of the central pivot, and instead we are down, down, down. So, once you get this kind of a move, the thing to do is sort of sit on your hands for a little bit and wait for things to come back to you. So you saw that in the collapse that we had in the morning, we had these inflections up here. And we did catch this infield fly move, and, that's fantastic. But outside of that, it was really a matter of hurry up and wait. So once we had these inflections at this line, we knew that if we got back up there again, we would have a good opportunity for a short, especially on an infield fly setup at that line, which we did get, sort of in the spirit of an infield fly. It didn't really get that long tail the way we like to see it, but it did get a short right from that line. So 491.11 was the first time that we were talking in the room and figuring out, what is that we want to do here. Well, get short is what we did, and unfortunately in that instance, 491.11, that got us down to 490.10, which is great, right? It's $1 per share profit, hip hip hooray, and then more uncertainty about tariffs, and then boo, right, the thing goes without us. So it got down low, and then as we were discussing, just keep waiting for it to come back to these threshold levels. You're going to want to see a violation of the threshold, so in this case a violation of 488.83, and then some sort of a consolidation and a pullback down through the line. It's exactly what we did get, and in this case got us down here into 487.63. So again, about $1.20 per share traded on it. It's not it's not going to change your lifestyle, and it's just terrible when you saw something like this happen in the beginning of the day. To be looking to peel off a dollar move here and a dollar move there when the move on the session's been $10. But you need to have a reason to get into these things. You need to know why you're doing what you're doing, and if it's the case that you like to wait for confirmation, we've got a couple traders who just absolutely insist that they like to get in when they see the markets moving. Once you see the markets moving, it's too late. It's too late to hop on that train. That train is leaving the station, and if you're unlucky, you're going to get killed. Because what happens is you think you see a move lower, and then you get in somewhere here, and then there's some sort of a pullback, and then you think you're wrong, and you get out, and you start racking up little losses, and those little losses just start stacking up against you. They mess with your psychology. They convince you don't know what you're doing, when the reality is if you wait for the market to come back to you, like we did on Tesla today, we had this move lower, market came back up. When it came in, it came back to that 265.15 level where we had our anchored VWAP, and we also had this volume by price cluster, and we had lots and lots of indication from earlier in the session that we had support and resistance there. So when you see that happen, that gives you a good opportunity then to say, all right, I'm going to get short 265.15, and I'm going to go and target 264.39 and then 263.61, that pivot line down below. Well, let's say you missed that one. You had lots and lots of opportunity once this line here was in place to say each time that I get to the line, I'm going to short the stock back down into this central pivot. And you're missing, of course, some bigger moves lower, but the important thing is you've got it set. You know exactly what you're waiting for. You know exactly where the precision entry is. And what you're not doing is saying, well, I don't understand. I thought I could get this, and I thought I could get that, and I missed all the good trades that were right in front of you. You didn't miss anything. You just had to wait for it. And it's that patience. It's this insistence that people have on having something to do every second that they're in front of the machine. And, I can tell you, there is something to do every second you're in front of the machine, and it's something else. Because if you're insisting on trading every second of the day, then what you're going to be doing in front of the machine is losing money. No two ways about it. If you wait for opportunity to come to you, right? So we had this move back up into that overhead resistance area there at 262.94. We've been talking about that in the room for the last hour or so, and what you saw us do was take all these retraces down to that line. So is it a giant move? No, 262.94 down to 262.42. But how many times did you get it? There were 3 opportunities to go and hop into the market, take that money off the table, and now we're down into this part of the range here, and what we're going to do is look to see if we get retraces up above this line into this volume by price that has this mark for 262.42, and then we have the opportunity for a move back down to 260.79. So, that's the gist of what we've been doing today, and I want to point out again that the important thing is not that you're working every minute that you're in front of the computer. If your work ethic is, I've got to be doing something every minute of the day, I have to make money. If I'm up and I'm doing anything, it's got to be earning. It's not going to happen. I'll take the mystery out of it for you. You don't even have to play the game. You're not going to make money doing that. You have to wait for the market to come to you. And if you don't understand order flow, and if you don't understand what the market is telling you, then just sit back and watch it, and watch what happens when it gets back to those threshold levels. And it's not about it happening every time, and there's not going to be certainty. There's definitely not certainty in trading the markets. You can have a first entry, you can have a second entry. If you take a third entry, it's very, very likely that your odds are at best 50-50, maybe more like 40-60, right? Because when it keeps moving into an area of support and resistance, sooner or later, that order flow that's sitting there is going to be sold out. It's going to be gone or bought up, right? If it's a long side trade and it keeps coming down to a level and hitting that level, and from that level you see price increase, what's going to happen when that buyer, when that order that's sitting there vanishes? The next time it gets down there, it's going to poke right through. And the same thing goes when you're shorting. So when you're shorting stock, just remember, if there's a resistance area above you and that's where you're shorting from, eventually they're going to buy through that resistance, and when that happens, it's not going to be a matter of leaving money on the table. It's going to be a matter of having money taken out of your pocket. So don't go back to the well too many times. Pay attention to what the market's telling you, and I'll see you right back here tomorrow.